Bitcoin-Frequenz. Herzlich willkommen bei Nodesignal, deine Bitcoin-Frequenz. Ich bin der Chris und ich habe heute im Netzwerk den lieben Jan Paul.
Hi Chris, grüß dich. Guten
Hallo
Abend.
Jan Paul. Guten Abend. Ja, Jan Paul, wir haben heute eine ganz besondere Folge, ne? Wir sind im Inception-Mode. Die Folge in der Folge.
Ja, sehr gut, genau. Das ist hier wie ist das, erste Traubenebene, oder wo sind wir jetzt?
Ja, genau. Und zwar haben wir es ist jetzt, glaube ich, auch schon 2-3 Wochen her, die Ehre und die Chance gehabt, mit Lyn Alden zu sprechen über ihr Buch Broken Money. Und ja, wir würden euch gerne dieses Interview präsentieren. Und zwar treffen wir uns jetzt heute, um euch ein bisschen eine Einführung in dieses Interview zu geben. Warum machen wir das?
Also ich glaube, wir machen das oh Gott, ja, gute Frage. Warum machen wir das eigentlich? Nein, also das Gespräch mit Lyn ist natürlich auf Englisch gewesen und wir wissen ja natürlich, dass unsere Zuhörer meistens deutschsprachige Zuhörer sind und wollten das so ein bisschen einleiten, das Gespräch, und so ein paar wichtige Themen mal rausgreifen und schon mal so vorbesprechen, dass ihr wisst, was da gleich kommt, dass es vielleicht euch hilft, das besser zu verstehen, was Lyn und wir da besprechen. Das ist das eine. Und das zweite ist, ich glaube, es ist auch nicht jeder Bitcoiner des Englischen so mächtig, dass er sich englischsprachige Podcasts oder Interviews anhört. Und wir denken allerdings, dass Lyn Alden eine sehr wichtige Stimme im Bitcoin-Space ist und wollen hiermit eben die Möglichkeit schaffen, dass auch diejenigen Bitcoiner, die wenig englischen Podcasts oder englischen Content konsumieren, dass sie trotzdem mal ein bisschen was über Lyn Alden gehört haben. Das sind, glaube ich, die beiden Gründe, warum wir das hier uns vornehmen.
Genau. Also wir sind ja ein deutschsprachiger Bitcoin-Podcast und ich vermute mal, dass der eine oder andere Hörer uns auch einfach gerne hört, weil wir deutschsprachig sind. Es gibt ja genug englischen Content da draußen. Es gibt auch schon einige Interviews mit Lyn Alden zu ihrem Buch. Und genau, haben so ein bisschen gestruggelt. Ne? Wir wollen es auf der einen Seite natürlich möglichst original und natürlich lassen und euch eben auch das ganze Interview präsentieren oder zugänglich machen. Aber auf der anderen Seite wollen wir es halt auch ein bisschen kommentieren, weil wir ein deutschsprachiger Podcast sind. Ja, dann lasst uns mal starten. Was wir allerdings noch brauchen, ist die Blockzeit. Hast du die Blockzeit, Jan Paul?
Yes, das ist die 818612.
Jo, das kann ich bestätigen. Sehr gut. Also, ja, wir haben uns überlegt, wir wollen vielleicht 3 von den ungefähr 10, 11 Fragen, die wir Lyn Alden gestellt haben, die wollen wir ein bisschen ausführlicher besprechen, ebenso als Intro. Und da war die erste Frage, die kam von dir, Jan Paul. Du hast die Lyn gefragt, warum hat sie denn ihr Buch überhaupt Broken Money genannt? Was hat sie geantwortet?
Vielleicht sollten wir damit anheben, dass wir vielleicht Lyn Alden noch mal ganz kurz vorstellen. Wer ist eigentlich Lyn Alden, oder?
Oh, ja. Genau, wer ist Lyn Alden? Ja, ich mache das mal kurz. Also Lyn Alden ist Amerikanerin. Sie ist von Hause aus Ingenieurin und sie wendet ihre ingenieurswissenschaftliche Ausbildung und die Art, Dinge zu analysieren, wendet sie auf die Finanzwelt an. Und damit hat sie sich in den letzten Jahren eine ganz große Followerschaft erarbeitet. Ich glaube, sie hat über 1 Million Follower, glaube ich, auf Twitter oder an die Millionen. Und genau, sie analysiert Finanzdinge und ist seit 2020 dann auch aktiv im Bitcoin-Space, hat in Bitcoin investiert und ich würde sie auch als Bitcoinerin bezeichnen. Genau. Und daher kennt man sie. Jetzt hat sie eben ein Buch geschrieben mit dem Titel Broken Money.
Genau. Genau, und wir haben sie gefragt, warum sie den Titel Broken Money gewählt hat. Also so ganz, weiß ich nicht, ob wir das jetzt im Einzelnen wiedergeben wollen, aber ich glaube, so der Kern, den sie transportieren wollte, war, dass also Geld in der technologischen Form, also dass es vielleicht gar nicht so sehr defekt ist, also wirklich kaputt ist, das war gar nicht so sehr ihr Punkt, sondern dass wir eher wie hat sie es genannt, ein lokales Maximum erreicht haben. Also die Technologie steckt irgendwie fest. Das heißt also, wir können im Grunde seit 150 Jahren in Lichtgeschwindigkeit Transaktionen durchführen. Das heißt, mit Aufkommen des Telegraphen, des Radios, Telefon, Internet, all das hat dazu geführt, dass wir Informationen inklusive der Transaktionen eben mit Lichtgeschwindigkeit versenden können. Aber das Settlement, ne, früher durch Gold oder physisches Geld, heute ist bei weitem nicht so schnell und kann nicht so schnell verifiziert werden und ist zudem auch noch sehr teuer. Und das hat zu einigen Problemen geführt. Ne? Also wir haben diese Lücke zwischen der Transaktionsgeschwindigkeit und der Settlement-Langsamkeit haben wir damit schließen können, dass wir zunehmend zentralisiert haben, ne? Und auch vieles abstrahiert haben aus diesem Geldsystem. Und sie beschreibt das so, dass es halt dazu geführt hat, dass wir halt extreme Währungsbubbles gebildet haben. Ne? Es gibt halt sehr enge Blasen. Sie spricht ja von den 160 Währungen, die wir weltweit haben, die durch strenge Kontrollen, also Kapitalverkehrskontrollen, Kontrollen an Flughäfen, Kontrolle der Banken, Kontrolle der Überweisungen über Landesgrenzen hinweg, dass sie damit halt sehr enge Grenzen gezogen haben. Und genau, und ich glaube, darum geht's ihr, ne? Dass es geht gar nicht so sehr darum zu sagen, dass das Geld irgendwie generell kaputt ist, sondern dass wir in dem jetzigen Geldsystem aus einer technologischen Brille heraus gesehen, ja, ein Maximum, also ein Plateau erreicht haben. Und daher rührt so ein bisschen ihr Titel, dass es Geld broken ist oder defekt ist.
Mhm. Ja, also vielleicht so ein bisschen die nächste Frage, die wir ihr gestellt haben, die ergänzt das noch so ein bisschen. Und vielleicht sprechen wir da direkt drüber,
Mhm.
denn, dann können wir das ergänzen, was wir da gefunden haben.
Genau, da war ja die zweite Frage. Also, das war eine Feststellung von dir, das fand ich super spannend, deine Beobachtung, dass du gesagt hast, es zieht sich durch das ganze Buch so etwas, dass sie Geld, auch wenn sie es historisch beschreibt, immer als Form einer Technologie sieht. Und deine Frage war, glaube ich, ne, ist es das Ziel, irgendwie Geld nur als Technologie und aus der Perspektive eines Ingenieurs zu betrachten?
Mhm. Ja, ich habe ihr diese Frage gestellt, weil ich finde, dass das, wie du sagst, der Leitfaden ist in dem Buch. Also, Geld ist eine Technologie. Und ich finde, das macht auch das Buch so ein bisschen einzigartig oder es macht ihr Buch sehr besonders, weil sie es eben das Geld aus einer technologischen Warte betrachtet. Und ich habe sie dann gefragt, ob das auch ihr Ziel war, das genauso zu machen, eben aus der Perspektive einer Ingenieurin. Und dann hat sie geantwortet, dass sie sagt: „Ja, also einerseits ist erstmal Geld organisch, also es wächst organisch, es ist zwischen Menschen, es ist was Soziales. Und in der Literatur wird es dann eben häufig aus der politischen Perspektive betrachtet und analysiert. Auch die Geldgeschichte wird eher als eine politische Geschichte angesehen. Und es geht dann um die Staatsüberhaupter oder Zentralbanker, die eben bestimmt haben, was Geld ist. Aber ihre Ansicht ist ein bisschen anders. Sie sagt eben, Politik beeinflusst die Dinge zwar grundsätzlich zum jeweiligen Zeitpunkt, aber die Technologie, die eigentlich zu dem Zeitpunkt da zur Verfügung liegt, ist eigentlich die Grundlage, auf der bestimmt wird, was und wie Geld funktioniert. Und Technologie ist letztlich das, was unseren Fortschritt vorantreibt. Also, sie sagt, die Welt bewegt sich in eine bestimmte Richtung, weil wir eben Technologien entdecken, wir als Menschen unseren Erfindergeist nutzen, um, ja, die Menschheit voranzubringen und fundamentale Dinge zu verändern.
Mhm.
Und dazu gehört eben auch das Geld. Und sie sagt, Geld fällt in diese Schublade und, ja, betrachtet eben das Phänomen Geld aus dieser technologischen Sicht.
Mhm. Das fand ich super spannend, dass sie da ganz ausdrücklich gesagt hat, ne, dass Politik, also die Zentralbanker, die Politiker, die großen Könige, dass sie eigentlich nur vorübergehenden und wirklich auch nur lokal begrenzten Einfluss haben auf den großen Gang der Dinge und dass sie es eher so sieht, dass es Technologie ist, die wirklich die Dinge global und nachhaltig in eine bestimmte Richtung voranbringt. Fand ich, war ein echt spannender Punkt.
Mhm.
Genau, daran können wir, glaube ich, gleich anschließen. Ne? Du hast es am Anfang gesagt, sie hat ja ausdrücklich gesagt, dass es nicht darum geht, das Geld als Technologie zu verstehen, sondern dass Geld etwas Organisches ist. Ne? Und wir haben sie, weil sie da gleich am Anfang ihres Buches eine sogenannte, ja, wie nennt sie es, eine Unified Theory of Money, also eine vereinheitlichte Theorie über das Geld hervorbringt. Genau, da ist die Fragestellung, oder was wir kennen aus der einschlägigen Literatur, ist die Unterscheidung zwischen Warengeld, also Commodity Money, und Kreditgeld oder Credit Money. Ne? Und was sie in dem Buch vorstellt, ist eine Vereinheitlichung dieser beiden Theorien. Vielleicht wollen wir da nochmal kurz drauf gehen. Meinst du, wir kriegen das nochmal rekonstruiert, wie ihr Argument verläuft?
Ja, lass es uns mal versuchen.
Mhm.
Also, sie sagt, dass Kredit und Warengeld beides dazu genutzt wurden oder dass es dazu gekommen ist, dass man Geld dazu nutzt, um den Tauschhandel zu vermeiden. Also,
Mhm.
ich habe frische Eier und möchte ein frisches Brot und das kann ich zwar jetzt direkt tauschen, aber wenn jetzt das sich zeitlich nicht so überlappt, dann brauche ich etwas, das ich nutzen kann, um diesen Tauschhandel zu vollziehen. Und sie sagt, daraus hat sich eben das Warengeld herausgebildet. Das widerspricht jetzt erstmal nicht der Theorie, wie wir sie so aus Bitcoin-Büchern kennen, ne, diese Warengeldtheorie. Sie sagt
Mhm.
aber, das ist eigentlich von vornherein schon Kreditgeld. Denn es gibt da ein Kassenbuch und das ist das Kassenbuch der Natur sozusagen. Die Natur führt quasi sozusagen Buch darüber, über das natürliche Geld, zum Beispiel Gold.
Genau, also den Punkt würde ich ganz gerne noch mal, klarkriegen, ne, weil ich finde den echt das hat sie sehr gut herausgearbeitet. Weil sie sagt, also Kreditgeld und Warengeld hat denselben Zweck, nämlich den Tauschhandel zu vermeiden. Das, was du eben beschrieben hast, ne? Also ich habe ein Brot und du, Chris, hast 2 Eier. Wenn ich jetzt 2 Eier will und du ein Brot willst, sind wir in dem glücklichen Umstand, dass wir das miteinander tauschen können. Aber das ist natürlich, das kennen die meisten Bitcoiner, das müssen wir jetzt nicht nochmal explizieren. Das ist natürlich nicht immer gegeben, dass es diese Koinzidenz der Wünsche gibt. Und jetzt gibt es 2 Möglichkeiten zu beschreiben, wie jetzt Geld ins Spiel gekommen ist. Und das eine ist halt, ne, natürlich kannst du sagen, es hat sich irgendwie natürlicherweise, und das ist das, was wir beobachten und das, was sie auch beschreibt, in ihrem Buch auch sehr schön, dass sich ganz natürlich immer ein Geld herausgebildet hat. Und dass bestimmte Formen, also meistens Gold und Silber, sich auch gegenüber allen anderen Geldformen, seien es jetzt Muscheln oder Reichsteine oder ne, such's ja aus in der Geldgeschichte, immer durchgesetzt haben. Das ist das eine, das ist Warengeld. Das ist quasi ganz natürlich, das können wir gleichsam historisch betrachten, sehen wir das immer wieder, dass dieser Prozess sich entwickelt und abzulaufen scheint. Aber es ist nicht zu missachten, dass auch die Kreditgeldtheorie ihren Platz hat, weil das Kreditgeld eigentlich nur darauf setzt, dass wir versuchen, das Settlement, den Ausgleich, ne, unseres Tauschhandels irgendwie zeitlich zu verschieben. Also sie geht darauf ja immer ein, dass sie sagt, ich gebe dir ein Versprechen. Ne? Also zum Beispiel, du Chris, du hast 2 Eier, die hätte ich ganz gerne, weil ich mir jetzt ein Omelett machen möchte. Ich kann dir gerade aber nichts zurückgeben, aber ich verspreche dir, demnächst, wenn du mal irgendwie was brauchst, wenn du ein Brot brauchst, kannst du dich gerne an mich wenden und ich werde es dir vergelten. Ne? Genau. Und in diesem Versprechen, das ich dir gebe, ne, ich werde es dir vergelten, darin entsteht das Kreditgeld quasi als Versprechen, die wir untereinander haben.
Ja, stimmt, jetzt macht's mehr Sinn. Ich glaube, du hast
Mhm.
es besser auf den Punkt gebracht. Also, ich fand den Gedanken halt total interessant, dass sie sagt, ne, also das sind ja konkurrierende Geldtheorien.
Mhm.
Und, dass sie sagt in diesem Buch: „Ich vereine das jetzt“, weil eigentlich ist es auch ein Kassenbuch, nur es ist das Kassenbuch der Natur.
Mhm.
Und das ist ein ganz schön verlässliches Kassenbuch. Zumindest bis jetzt lange gewesen, ne, bis wir Fiatgeld hatten.
Genau, also das hat mich auch ehrlich gesagt überrascht, ne? Also, weil wir natürlich als Bitcoiner sind wir mit dem Thema eines Ledgers natürlich sehr vertraut und, ne, wir wissen, dass quasi, ne, also häufig Ledger geführt würden, also, Konten geführt wurden, um halt Geldgeschäfte abzuwickeln. Und sie nutzt es jetzt, um die beiden Theorien, Kredit- und Warengeldtheorie, miteinander zu vereinen. Und der Trick, den sie anwendet, ist zu sagen, dass halt auch Warengeld einem Ledger entstammt. Aber der Ledger ist halt nicht, ne, also da sitzt jetzt keiner, der mir jetzt Buch darüber führt, wie viel Gold denn jetzt noch auf der Erde vorhanden ist, sondern quasi, wir müssen einen Schritt zurücktreten und sagen, ja, wir schauen halt auf die Natur als Ganzes und die stellt halt nur einen bestimmten Vorrat an Gold zur Verfügung. Genau, insofern ist das quasi der Ledger, den wir haben. Es wird natürlich auch ein bisschen komplexer, wenn man dann, ne, sich betrachtet, ja, wir haben natürlich dieses Stock-to-Flow bei Gold, ne? Es ist eine bestimmte Menge ist bereits gefördert und in Umlauf und es kommt immer so irgendwie zwischen 1,5 und 2% pro Jahr an neuem Gold dazu. Genau, aber sie sagt halt, dass man die Warengeldtheorie auch als eine Ledger-Geldtheorie verstehen kann und verweist, das fand ich super spannend, das habe ich dann auch noch mal nachgeguckt, auf Wences Casares. Wences Casares ist
Mhm.
ein sehr interessanter Typ. Ich weiß gar nicht, ob die Firma noch gibt. Er hat früher mal Chapo gemacht. Er ist ein Argentinier, der sehr, sehr früh oder sehr jung zu Geld gekommen ist, weil er, ich weiß nicht, ein sehr guter Entrepreneur war und der sich auch recht früh schon Bitcoin zugewandt hat. Und der hält bereits irgendwie in den frühen Jahren von Bitcoin, so 2011, 12, 13, hält er bereits Vorträge über Bitcoin. Und auch er verwendet diese Theorie, dass es sich bei Geld um einen Ledger handelt. Das ist quasi die Form des Geldes.
Mhm. Ja, spannend. Fand ich auch also in dem Interview, aber auch in dem Buch eine hervorhebenswerte Theorie. Ja, zusätzlich haben wir Sie noch eine ganze Menge anderer Fragen gefragt. Die Antworten wollen wir nicht alle repetieren, aber vielleicht können wir ganz kurz einen Überblick geben. Wir haben über Fiat-Währungen gesprochen und ob
Mhm.
die Tatsache, dass wir 160 Fiat-Währungen haben, ob das eigentlich nicht eine Anomalie ist. Darüber haben wir gesprochen.
Mhm.
Wir haben darüber gesprochen, dass irgendwann die Technologie das Warengeld outperformt hat, wie du eben dargestellt hast, ne? Dadurch, dass wir mit Lichtgeschwindigkeit kommunizieren können, war einfach Gold und Silber irgendwann zu langsam und man brauchte Papiergeld, Kreditgeld oder Geld, das man eben auf nicht gedeckten Konten hin und her schiebt. Und jetzt ist die Frage, ob die Technologie wiederum das Fiat-Geld outperformt. Und da sind wir danach zu Bitcoin gekommen, ne?
Mhm.
Und haben über Bitcoin gesprochen. Das ist vielleicht was, da könnten wir noch mal ein bisschen genauer drauf eingehen. Wir haben Sie gefragt, was sind die Herausforderungen, die Bitcoin jetzt als neue Technologie hat und welche Herausforderungen gibt es, also welche technischen Herausforderungen gibt es und
Mhm.
welche über die Technologie hinausgehenden Herausforderungen haben wir noch?
Mhm.
Ja, was hat sie geantwortet? Willst du?
Ja, also ich glaube, sie hat das, finde ich, sehr analytisch einfach wiedergegeben, ne? Also ja, sie sagt, Bitcoin funktioniert und natürlich ist die Frage, funktioniert es gut genug? Und die Frage, also was heißt denn gut genug zu sein? Da müssen wir einfach zugestehen, dass Bitcoin als Protokoll natürlich Bugs haben kann. Das ist auch in der Vergangenheit schon passiert. Die Frage ist, was kann denn noch in der Zukunft an Bugs auftreten? Wie wollen wir jetzt weiter damit umgehen? Ne? Es gibt ja also ich würde es noch nicht mal als Streit bezeichnen, sondern es ist einfach so eine ja, fortlaufende Diskussion. Soll Bitcoin sich ossifizieren, also was ist denn der deutsche Begriff dafür? Verknöchern, versteinern, also seine finale Form angenommen haben und dann halt auf ewig so bleiben? Oder wollen wir noch mit einer Handvoll von Softforks Bitcoin in den nächsten Jahren noch verbessern? Dann hat sie natürlich das Thema Supply Chain Engpässe, ne, gerade was so Chips angeht, für unsere sehr spezialisierten ASIC-Miner angeht. Aber das hat sie, glaube ich, wenn ich mich richtig erinnere, auch gleich so ein bisschen beiseite geschoben und hat gesagt, so ja, aber das ist eher ein sehr allgemeines Problem. Das trifft ja quasi unsere gesamte Informationstechnologie, ne, dass es da einen Engpass geben könnte bei dem Thema Chips. Und Privacy hat sie genannt als eine sehr große Herausforderung. Das fand ich auch sehr stark. Da hat sie ein sehr starkes Plädoyer gehalten. Chris, auch nochmal danke für deine Frage, die du ihr gestellt hast, warum sie das Thema Human Rights und Privacy
Mhm, mhm.
in dem Buch so stark betont hat. Also das könnt ihr euch gerne dann, glaube ich, anhören. Das werden wir vielleicht hier nicht mehr ausdiskutieren. Aber ich finde, sie hat ein sehr starkes Plädoyer für Privacy in Bitcoin gehalten. Auch nicht nur in Bitcoin, sondern ganz im Allgemeinen, warum wir Privacy tatsächlich brauchen und was uns droht
Mhm.
mit der Einführung von CBDCs.
Mhm. Ja. Ich will da gar nicht viel ergänzen. Zu den CBDCs hat sie einen guten Vergleich gebracht. Sie sagte, sie hat das Fiat-Geld eben als Fiat-Silos bezeichnet, als Silos,
Mhm.
also als geschlossene Räume. Und sie sagt eben, CBDCs ist die Möglichkeit, die Menschen noch fester in diesem Silo gefangen zu halten oder
Mhm.
einzulocken, ne? Also
Mhm.
festzuhalten. Ja, gefangen halten ist vielleicht ein bisschen übertrieben. Genau, das fand ich noch ganz bemerkenswert, dass sie es so gesagt hat. Wir haben mit ihr auch so ein bisschen noch mal über Block Subsidy gesprochen versus
Mhm.
Fee Model. Dazu hatten wir ja auch vor einigen Folgen mal drüber gesprochen. Und ich fand ganz interessant, was sie gesagt hat. Ich glaube, wir hatten das auch in der damaligen Folge haben wir sie zitiert, ne? Und
Mhm.
sie sagt eben, dass dieses Mindset jetzt schon daran rumbasteln zu müssen und rumdoktern zu müssen, wie Bitcoin in so und so viel Jahren mal aussehen soll, wäre eben Central Banker Mindset.
Mhm.
Und das sollten wir eigentlich mit entspannt sehen. Also sie hat da eine sehr Austrian Way, das zu sehen. Ne? Sagt, entweder es klappt oder es klappt nicht.
Ja, genau. Vielleicht lohnt es sich nochmal, das fand ich ganz interessant, das wusste ich nämlich nicht, vielleicht nochmal so ein Fakt, dass sie gezeigt hat, dass Bitcoin ja dieselbe Anzahl, also nur die Anzahl der Transaktionen hat wie Fedwire, aber nur 1% des Transaktionsvolumens. Also, weiß nicht, was hat sie gesagt? Irgendwie 1 Trillion US-Dollar sind es bei Fedwire und bei Bitcoin eben nur ein Hundertstel davon.
Mhm.
Genau, und sie erwartet halt, dass sich ein nachhaltiger Viehmarkt entwickeln könnte. Ne? Sie ist da recht optimistisch und sagt, der Markt wird da eine Lösung finden. Und wenn es nicht ausreichen sollte, dann ist Bitcoin halt eben nicht robust genug gewesen, um
Mhm.
in dieser Umwelt zu bestehen. Dann müssen wir das vielleicht auch hinnehmen. Ich will jetzt keine Worte in den Mund legen. Aber das hat sie, meine ich, oder korrigiere mich, Chris, ich glaube, das hat sie so ungefähr in diese Richtung schon gesagt, ne?
Ja.
Da muss sich Bitcoin jetzt halt beweisen. Und wir sollten halt jetzt nicht anfangen, aller Zentralbanker irgendwelche Probleme schon zu lösen, die vielleicht überhaupt nicht auftreten werden.
Mhm. Sie hat auch noch mal aus einer so großen Sicht drauf geschaut, ne? Sie sagte: „Wir bauen jetzt hier nicht nur an der Technologie“, also wir meinte sie eben diejenigen, die sich mit Bitcoin beschäftigen, sondern es ist eben 'n ganzes Ökosystem, was da entsteht. Und das gibt ihr sehr viel Hoffnung, dass das funktionieren wird. Also, und sie erwartet auch, dass der Blockspace einfach irgendwann sehr wertvoll sein wird.
Mhm.
Ja,
Gut. Ja, ich glaube, du hast es schon angedeutet, ne? Wir haben noch viel mehr Fragen mit ihr besprochen. Wir haben recht lange mit ihr über das Thema Privatsphäre, CBDCs, Bitcoin-ETF gesprochen. Genau, also hört da gerne mal in das Gespräch rein. Ja, wir haben sie natürlich auch zu ihrer Einschätzung der aktuellen Lage gefragt. Also jetzt vor dem Hintergrund des gerade ausgebrochenen Konfliktes in Palästina, ob sich das irgendwie auf ihre Thesen auswirkt. Und das würde ich ganz gerne doch noch mal kurz erzählen, weil ich das sehr spannend fand. Sie wies darauf hin, dass sie schon seit längerem auf die Parallelen der heutigen Zeit zu den 30er, 40er Jahren des 20. Jahrhunderts hinweist. Allerdings immer mit der Hoffnung, dass diese Entwicklung nicht so kinetisch sein wird, also sie nennt es Kinetic immer, wie im 20. Jahrhundert. Ja, und jetzt sehen wir dann doch, dass es sich vielleicht etwas kinetischer entwickelt, als wir vielleicht zu hoffen wagen wollten. Das fand ich auch ganz spannend, dass sie das nochmal betont hat.
mhm. Ja, und dann haben wir sie eigentlich war das so unsere, vorletzte Frage, ne? Aber ganz am Ende haben wir sie noch gebeten oder, haben ihr noch den wie soll man sagen, das Privileg des letzten Wortes gelassen und das hat sie auch genutzt und das fand ich richtig gut, was sie da gesagt hat. Ich weiß nicht, ob wir's jetzt schon wiedergeben wollen oder einfach als Teaser stehen lassen, aber
Ja.
sie wirbt vielleicht ganz kurz zusammenfassend, sie wirbt in diesen Zeiten, die ja wirklich gefährlich sind, ne? Also, wir haben Inflation, wir haben, wirklich kinetische Kriege, wir haben, Kriegshandlungen in an verschiedenen Teilen der Welt und sie wirbt sehr inständig dafür, dass man doch versucht, die Perspektive mal zu wechseln und sich nicht
Mhm.
auf ein Gruppendenken so festzulegen.
Mhm. Ja.
Das fand ich sehr gut.
Genau, also das hat mich auch sehr beeindruckt, was sie da gesagt hat und hat dazu geführt, dass ich versuchen möchte, mir das mehr zu Herzen zu nehmen, wie sie es ausgedrückt hat. Aber das könnt ihr, liebe Zuhörer, euch dann gleich in der Aufzeichnung des Gespräches anhören.
Genau. Ja, dann bleibt uns eigentlich nichts, als euch ganz viel Freude bei dem Interview mit Lyn Alden zu wünschen.
Mhm.
Und lasst uns gerne einen Kommentar da. Lasst uns wissen, was ihr darüber denkt. Kommt in unsere Telegram-Gruppe. Und wie ihr wisst, wir sind ein Value for Value Podcast. Schickt uns doch gerne einen Boost und hört den Podcast mit einem Value for Value Player.
Ich würde gerne noch eine Sache hinterher schicken, bevor wir euch in das Interview mit Lyn entlassen. Ich glaube, wir beide, Chris, sind sehr begeistert von dem Buch. Das darf ich, glaube ich, so sagen, oder Chris?
Ja.
Wir empfehlen das jedem. Das ist ein wirklich, wirklich gutes Buch. Nicht nur über Bitcoin, sondern halt auch über Geld an sich, über die Geldgeschichte. Sehr detailliert, sehr umfangreich, sehr kenntnisreich, mit wirklich Verweis auf sehr, sehr viele Quellen. Es ist in meinen Augen ein unglaublich tiefer Schatz, den sie da gehoben hat. Also wenn ihr des Englischen mächtig seid, dann kauft euch auf jeden Fall dieses Buch und lest es. Die Hörbuchversion ist auch gerade erschienen, diese Woche, gelesen von Guy Swan. Und wir wissen, dass eine deutsche Übersetzung in Arbeit ist. Ne? Apricomedia hat es jetzt mittlerweile auch angekündigt. Wir haben sie auch im Interview schon mal gefragt. Und da hat sie verraten, dass wahrscheinlich die deutsche Übersetzung eine der ersten sein wird, die rauskommen wird.
Ja, sehr cool. Freue ich mich drauf. Gut, dann viel Spaß mit Lyn Alden. Welcome to Nodesignal, your Bitcoin frequency. Today in English. You will find out why in a second. I found 2 nodes on our network today. My friend Jan Paul. Hey, Jan Paul.
Hi, Chris.
And we are very honored to have found another very wonderful node on the network, Lyn Alden. Hey, Lyn.
Happy to be here. Thanks for having me.
Cool. Thanks that you accepted our invitation. Yeah. Before we start, Lyn, do you have the block time?
So the block height is 814091.
Yes, I can confirm that. You too, Jan Paul?
Nope, I don't have my block time. Yeah, but I guess it's right. 2 can confirm the block height, so it's good.
Yeah. All right. The Nodesignal podcast is a value for value podcast. If our content adds value to you, feel free to give us back some value and send us a lightning tip via our website, nodesignal.space. or listen to the podcast via a Podcast 2.0 player to stream sets or send us a boost while listening. We share the revenue from each episode with our guests. But now back to the show. Today we talk to Lyn Alden about her new book, Broken Money. I'm sure that everyone listening knows exactly who we have the honor to speaking to. However, if anyone doesn't know yet, Lyn, what should listeners know about you?
So my background is a blend of engineering and finance, specifically electrical engineering, but then I went into engineering management and running the finances of an engineering facility. These days, I focus on applying systems engineering analysis to financial markets, so the structure of monetary systems specifically. And I'm the author of Broken Money. I write at lynalden.com. I'm on the board of directors for Swan Bitcoin. I work with Ego Death Capital to do Bitcoin focused venture work. And so, both from an investing standpoint and a research and analysis and educational standpoint, I do a lot of work in the Bitcoin space as well as the broader macro space.
All right. Thank you.
The first question that we have is kind of a meta question because you wrote a book titled Broken Money. So it's apparently a book about money. But the first chapter or first part in your book is the question, what is money? So why is that the first question that needs to be answered in a book about money? Why did you take that approach?
Because I think if we're exploring why money is broken, or if we're making the argument that money is broken and explaining why, it helps to define what is money. What problems is money trying to solve? Because it's hard to argue that something is deficient or broken if we can't even articulate what it's supposed to be doing, or what it's ideally supposed to be doing, or why people use money in the first place. Why does this keep reemerging around the world in different ways? Money's a good that just kind of naturally keeps emerging over and over again. People use it to solve specific problems, to make trade easier to do, and it's a type of signaling mechanism. And overall, it's in order to explore what makes a good money or why money's broken, it helps have a foundation. And I also try to look at multiple schools of thought on money and kind of reconcile them, because what I try to do with my work in general, and this book specifically, is speak to a wide audience. So not necessarily just speaking to people that already agree with everything I say. It's basically going out to different camps out there and understanding how to speak their language so that I can then give them my thoughts. Because it's hard to share something with someone if you're not even fully aware of their argument or what they might do. So what I kind of do in the book is I say, okay, here's like multiple ways of looking at it. Here's how I look at it, or here's how I reconcile certain ideas. So the book takes a very kind of high level view to start off with. It says, what is money? And then we go kind of in the history of how money developed, how banking developed, why, and it specifically focuses on the technology lens of money. So how did ever changing technologies change how we use money, and what money we use in the first place? And so just having a theoretical foundation helps with those practical analyses.
Mhm. Thank you, Lyn. That leads me to my next question. When I read the book, I couldn't get one perspective that you supposedly followed out of my head. You describe money in its historical and current form as a technology. From my point of view, this perspective is what makes broken money so unique. Was it your goal to look at money as a technology and thus redescribe it from an engineer's perspective?
So I think it is somewhat organic. I mean, people approach things in ways that kind of make sense with their mental model. Maybe my engineering background predisposes me to that, but I feel like there's a lot of literature that explores money from the political realm. So especially monetary history, they say, okay, here were major points in history where, this political leader did this, or this central bank leader did this, and this was the outcome. It's very kind of social and politically focused. Whereas my view is that politics and things like that change things like temporarily and locally, but technology is what drives things forward globally and permanently. It's like, why does the whole world kind of move in a general direction? It's largely because technology has changed something so foundational that older ways of doing things become untenable, or the incentive structures just no longer reinforce themselves, and it's a new world now. And you can kind of think of, like, if you're talking about a country, for example, and you want to improve people's quality of lives, one way is to have better politics, but another way is to invent something so useful that it just permanently improves everybody's lives and then even spreads globally and improves their lives too. So, for example, the people who discovered electricity and invented electrification and the light bulb and refrigeration and running water and basic medicines and basic like surgery techniques and anesthesia, these has such tremendous impact on people's lives in the global sense. And money kind of falls into that bucket as well. There are certain things that we take for granted, like the printing press or paper or the telegraph or, of course, Bitcoin. New technologies that come along that are basically either mediums that allow for like a faster transaction speed and information speed, or different types of encryption, different techniques, including old school analog encryption, or just like printing presses and methods of securely transferring value. And these things are a very underexplored area of money.
It sounds a little bit like when I look at your title, you say it's broken money. So is the technology broken? So my question basically is, why did you go for that title? And maybe you can share with us, did you have any other titles in your mind while writing? And why did you finally choose broken money?
So one of the themes I explore in the book a lot is that money is like a ledger, and different, over as we use different ledgers, there's different controllers of those ledgers. So one of the initial working titles was Money, a story of ledgers and who controls them. But that just didn't really have the punch to it. And so it was the title came later after the book was mostly fully formed. I felt like Broken Money had a more direct impact to it. And what I really wanted to stress was the way I would describe it is not that technology is broken, but that we're stuck in a local maximum for technology. So basically, when a local maximum is something where you've reached a higher point that you've been at before, but you're nowhere near the top. Like you have to. It's like you're stuck in something that seems like it's working, and you might not even know how things could be better, but they could be way better. And the specific trap that we've been stuck in for about a century and a half is largely that transaction speeds are at the speed of light. So ever since the invention and specifically the worldwide adoption of the telegraph, and then of course the radio, the telephone, the internet, all of these technologies, we can move information, including transactions, around at the speed of light, but physical gold settlement, physical money settlement, can't move that quickly, and it can't be verified that quickly, and it's costly to do so. So we've basically bridged that gap through ever greater levels of centralization and abstraction. And so that's the local maximum we've been stuck in. And what it enables is that you can have 160 plus different currency bubbles. So money's supposed to be a unifying factor in trade. But when you have 160 plus different currencies, you've almost like recreated the barter system. You have 160 different local monopolies,
Hmm.
and they're able to do that because banks and central banks basically have had a monopoly on fast, long distance value transfer. And so if they can control their borders physically, then they can control how much cash or gold, people can bring in or out of airports. And if they control the banks and what wires they can send or receive, then they basically have a complete lock on their financial borders, or at least like, a very tight lock on their financial borders. And that's been in place really ever since the second half of the 1800s, so the adoption of the telegraph, all the way up to the invention of Bitcoin. And the era that we're in now is we potentially have tools to address the problems we've been in this local broken money kind of environment, because now we finally have ways to have fast, long distance value transfer that are not based on credit, that are instead based on the bare asset itself
Hmm.
moving, nearly at the speed of light.
Speaking of credit money and the theory behind money itself, there are two like opposing theories of money, and you unify them in your book. In many of the current Bitcoin or money books, a distinction is made between commodity and book or credit money when it comes to defining forms of money. Refreshingly, you do not share this definition. You describe it in such a way that ultimately both forms of money mentioned above are a ledger. How do you come to this conclusion, and how can this definition be applied in particular to so-called commodity monies such as gold?
Yeah, I think the way to apply it to gold. So to take a step back for a second, the two schools of money, credit money and commodity money, they really come down to the two ways that you avoid barter. Either, if you have a double coincidence of wants, so you need extra spears, and like you need more spears but I have extra furs, and I need more furs but I have extra spears. we can then do a trade, but that's a very specific combination, and there's more ways that trade can fail. And so we there's basically two main ways to solve that. Either we solve it through time deferment. So if one of us has what the other one needs, but the other one does not have what the other one needs, they can say, okay, well, you owe me that at a later date, or informally, okay, here's a gift, and if I ever have problems later, maybe, you'll be able to help me out. So either informally or formally, you can defer that through time as credit. And the other way is to basically, it just arises naturally that some commodities are so desirable and so useful as money. They're portable, they're divisible. You can never really have too much of them. They're long lasting, they're scarce, so they're very hard to make more of. They naturally have these monetary aspects, and they can be used as one side of most transactions. They're the most saleable good. They're the good that, when you don't know what you really want, you can always just take more of that good, right? So I never have too many dollars or gold coins, for example, but I can have too many pieces of furniture, right? There's too many chairs. I don't need any more chairs, but I'll never turn down an extra, dollar or gold coin or Bitcoin, for example. There's certain goods like that. And so those are kind of the two ways to make trade easier to do. And so they've had competing theories on what is money. Now, there's a number of people that point out that basically money is a ledger, and one of the original ones to mention that, and it's funny because it's not really in literature, like you can't really find books that mention this, but the one that really kind of spearheaded that idea was Ventus Casares, like a decade ago. He would just talk about that. He's recorded on speeches of making that argument, but it's not really in literature too much, and it wasn't really presented as a way to unify these ideas. But I think that's the best application for it, which is basically to say that whether you're using credit money or commodity money, you're relying on a ledger of some sort. There's a certain
Mhm.
number of units and a method of controlling who has stake in those units, who controls those units. With a credit ledger, it's more obvious. It's either written or orally administered. With a commodity money, basically nature is the administrator. If you kind of have like, if you can imagine like a real-time strategy game or like a god level view of the area, there's a certain number of gold coins, gold bars, or if it's hunter gatherers, maybe shell beads, whatever the money is for that environment. There's a certain number of them. There's a certain kind of process for how they can be made more of, and they are exchanged through physical possession. And so if you were omniscient and you could kind of see all them moving around, it's essentially a ledger. It's just that no one participant in that system can see the whole ledger, even though that ledger is still basically there. It's just being governed by nature. And so historically, nature's been the more reliable ledger, right? So we can't cheat gold as easily as we can cheat credit monies. But basically, these are the two types of ledgers we rely on: either other humans controlling them or falling back to nature when humans let us down.
Mhm.
I have a follow-up question. You said that, or it sounded like the actually 160 currencies that we have worldwide is sounds like an anomaly, right? It should tend, at least it sounded like this to me. It should tend to be less, maybe just one. Is it? Is that the optimum for money, to be just one money for everyone?
One would be ideal if a money had no shortcomings. Historically, it's usually been two or more because no money has been perfectly able to meet all things. So, for example, the reason that bimetallic or even trimetallic
Mhm.
standards were common was because you'd have gold, which is in most cases the best money, but it's not divisible enough for like the middle class, the working class. Like one small, like the tiniest gold coin you can realistically make is worth more than many small or medium-sized transactions. It's worth more than many days of labor, for example. And so silver would be common as like a second tier of money, and sometimes even copper. So actually, like double money systems were common. You'd have, for example, grain and silver in Babylon. You'd have cocoa and copper in parts of South America. These kind of double systems were common. And then what they generally share in common, though, is that when you present them to an external culture, they're usually recognizable as valuable. If you give cocoa to someone and explain what chocolate is, it's inherently a useful thing. They can give some value to it. If you have different empires that both use gold and silver, but maybe they denominate it differently, you can still kind of figure out how to translate one into another, and make trade in a maybe a little bit more friction, but there's a way to do it. Fiat currencies are anomaly in the sense that it's just you have 160 different, completely different currency bubbles, and their saleability, their desirability rapidly falls away outside of their borders, with the exception of the top two or three, hegemons of the world whose currencies have more global reach. But outside of those, you know, there's almost no use for that money outside of its own jurisdiction, that is historically abnormal. And it's in large part because we exist in this world where for the first time speed matters. So up until the invention of the telegraph, the harder money always won out. So, silver beat grains and gold beat silver. And we over time, we gravitate towards the precious metals and most other commodities. Our technology became too good. We got too good at making them for them to be useful as money until we found gold and silver. And that kind of settled everywhere. But with the telegraph and speed of commerce being as fast as it is, speed is now a variable. And so the dollar has been able to kind of defeat gold in terms of market cap and just overall network effects, salability, usefulness. And that's large part because although the dollar is not as scarce as gold, it still has a reasonable supply growth rate compared to many other things, and then it can be moved around quickly and efficiently. And so what the world's been based on. But of course, it's very imperfect. I mean, it's the fact that it does inflate a lot more quickly than gold is a problem. The fact that it's centralized is a problem, and then the fact that other countries replicate the same model but theirs is far worse. So you can be stuck in, any number of these other jurisdictions where you have like 25% annual money supply growth, and you're just constantly getting diluted, both your savings and your wages. And it's hard for you to get external monies, or at least until recently. And that's in large part why money's broken. It's an anomaly.
Mm.
Hmm.
I have a follow-up question to that. So you very nicely showed that commodity money has been outperformed by technology, by information technology in particular. Do you think that fiat money, as it is now, is being outperformed by technology again? Is it repeating itself in the other direction?
I think we're in the early stage of watching that happen. It took a while for fiat currencies to kind of, especially with government force, kind of outcompete gold. Right now, when you look at Bitcoin's market cap compared to fiat currencies in general, it's certainly the trajectory is great. So the rise in market cap, the rise in liquidity, the rise in people taking it seriously, the number of currencies for which it has passed their money supply in terms of global market value is,
Mhm.
it's actually the majority of them now. In terms of global saleability, like if I bring an Egyptian pound with me to, countries around the world versus if I bring a Bitcoin with me, which one will be easier to, get off my hands at some reasonable market value? Usually now it's Bitcoin, unless I'm in Egypt or one of the bordering countries, for example. And so in terms of most metrics, Bitcoin is ascendant, but it's still at a very small base compared to overall dollar, network effects, liquidity, saleability, even euro, yen, some of these other big ones. But it's certainly the trend is now strongly in favor of fiat currencies being disrupted by Bitcoin. Then even some of these weaker fiat currencies are getting disrupted by digital versions of stronger currencies. So stable coins give another
Mhm.
vector for dollars to enter Argentina or enter Turkey or enter Lebanon, for example, and they break that. I talked about that monopoly of, if a country controls its physical borders and its banks, they can basically determine what transactions go in or out. But if you can send some money over an email, if you can send some money with a QR code on a video call, either Bitcoin or stable coins, whatever the recipient wants, or both, that breaks all that financial firewall is now more porous. And so now currencies compete with each other more directly, in addition to
Mhm.
Bitcoin competing with all of them.
Mhm.
Okay, let's talk a little bit more about Bitcoin. What I find quite interesting is you say it very explicitly in the beginning of your book that your book is not a Bitcoin book. But if you look at the chapters, the Bitcoin chapter is not by far the longest. The chapter before on the entropy of fiat ledgers is a little bit shorter. But why is Bitcoin so dominant in your book? Is it the fix for our broken money, or was there an alternative?
So, originally the book was 5 parts, and I eventually like the center, like parts 3 and 4 were combined. So that was the biggest part. but I eventually broke that into two. So what part ends up being the biggest is largely an organizational question. There was no particular reason to break the Bitcoin section up. And so that was standalone, the biggest part in the book, even though it's a minority of the book as a whole. But to your prior point, basically, because I do view Bitcoin as the most powerful solution for broken money, that it deserves a lot of focus. Basically, it's one thing to focus a lot on the past, but then give no answers for the future. I'd rather use the past to then help us figure out what the future can look like. Now, and then I contrast that with other digital monies that are out there. So I contrast that with central bank digital currencies, which I don't think are a good idea. I contrast that with stable coins, which I think are an intermediate term solution for many people. It just the idea of stable coins or just tokenized assets in general just basically creates more global competition for existing monies. So if an Argentinian wants dollars, it's just another method for them to get dollars. So I think that that's useful to the extent that it helps them in the intermediate term, but ultimately they're centralized, they're controllable, they're ceding their power to another nation. They're helping monetize that other country's money, basically feeding the empire. So it's one of those things where it can be individually useful, but clearly not a sustainable fix. And so Bitcoin gets a lot of attention because it's what I view as the most powerful technology. And a kind of a meme I put on Nostr is that it's not a Bitcoin book, it's a book about monetary technology, and Bitcoin is the best monetary technology. So it's by extension, it's kind of a Bitcoin book, but it's not like set out to be.
Mm. Speaking of Bitcoin as a technology, what do you think are the challenges for Bitcoin as a technology? And what challenges are there for Bitcoin outside the technology domain?
So I think as part of the monetization process, it's being challenged to see how solid it is. I mean, when I encountered it many years ago, I think like a lot of people, I was never like anti Bitcoin, but I was kind of like, that's cool, but like, what are the probabilities that's actually going to be successful? Is someone's going to, it's going to either get diluted with a thousand other ones, or it's going to get hacked, or it's going to get centralized. What's the chance that that just shrugs off any and all attacks for it? But after I went through enough cycles, I was like, okay, this thing's actually not dead yet. So it's actually working. So as it goes through these various tests, it's basically being challenged to see if it's good enough, if it's hard enough, if it can be corrupted or broken in any way. So one of them is just obviously the challenge of, Bitcoin has had bugs in the past. It's by design. It's the simplest, crypto out there. It's the one that maximized decentralization, security, simplicity, robustness, but it's not been immune to technical challenges. There's debates around ossification versus having a handful more of soft forks to make it, a little bit more efficient, more scalable. Things like covenants or other more controversial ones. So that's a challenge that has to just be kind of, we'll see how that shapes out in the years ahead. There's also challenges related to supply chain bottlenecks. So there's only a couple foundries in the world that can make chips, like high-end chips
Mhm.
for Bitcoin mining. So that's a potential centralization point that I think is, there are companies like Block Inc. that are working on further decentralizing that, but that's actually a broader kind of challenge for semiconductors as a whole. It's not a Bitcoin specific problem. Is it that there's really only a few countries in the world that produce the high end semiconductors for the rest of the world, and that happens to also potentially as a tail risk scenario affect Bitcoin. And then it's just overall, I think privacy is a really big challenge. So because it's traceable, and then there's various ways to make it more private, but then those can be more targeted but by legal methods to try to disincentivize them or make them harder to do or reduce the liquidity of those privacy methods. So any privacy method is kind of restricted by how liquid it is. And that even applies to
Mhm.
other coins like privacy coins. They're still restricted by how big they are and how many exit and entry points they have. So whether or not you're talking Bitcoin or others or layers on top of Bitcoin, they're restricted by their liquidity. And so what policymakers can do is target them to try to keep their liquidity smaller so that they're less of an issue. So I think that's a long battle ahead, I think, and it's partially a social battle, basically convincing people that privacy is not the same as illegality, that privacy and money laundering are two different things,
Yes.
rather than just to use the terms as though it's the same thing. And it shift the goalpost for like what is, it used to be privacy is the norm. Now privacy is not the norm, and privacy is considered weird. and to try to get that back. So I think that there are a number of challenges ahead. So far, it's almost 15 years of surviving these challenges, being anti-fragile. Any kind of issues it comes up with, it usually gets stronger because of it. No particular reason to see why that pattern wouldn't hold, but it's people have to stay focused.
Mm. I have a follow-up question on the technology challenges. We just recently in our podcast had episodes or a deep dive on the block subsidy transition into a fee model on one hand, and on the other hand, we were talking about the fee market in the future, and let's say about small UTXOs not being able to be moved anymore. So there seems to be a corridor in between where Bitcoin moves safely. How do you see that? Are there challenges, and or is this just hysterical?
Well, so I think there are challenges. I think they're often used in overblown ways. So people think that they can model what Bitcoin's going to look like 20 years from now and
Mm.
suggest we have to do like emergency fixes right now, and we have to tinker with it. That's like a central banking mindset of like, okay, we have to keep tinkering the system. The way that I look at it is that right now Bitcoin does about as many transactions per year as Fedwire, so the Federal Reserve's like central clearing. But Fedwire does, and this is not a typo, it does $1 quadrillion worth of gross settlement volume per year, which is about 100 times as much as Bitcoin. And so Bitcoin has got like 1% of Fedwire. And we don't know what fees are going to look like if Bitcoin is 10% as big as Fedwire, or half as big as Fedwire, or as big as Fedwire, or twice as big as Fedwire. It's hard to, as this thing, if it continues to grow, it's hard to say what fees will look like. In general, if that's the direction we go, I think that the base layer would primarily be used for settlement type of transactions, and
Mhm.
higher levels would be used for more transactional types, including non-custodial and custodial different types of ecosystems that are out there. And then that that's part of the ongoing ossification versus soft fork debate, which is if if fees are high and the base layer is restrained, that means only a small percentage of the world can be using the base layer,
Yeah.
basically rich people. On the other hand, if you try to tinker too much with it and sacrifice decentralization, you kind of break the whole model for why Bitcoin's valuable in the first place. I think that the market's going to sort this out pretty well. I think that there's maybe small, low risk things that can be done to make it a little bit more scalable in the base layer. But I also think that the second and third layer is going to get more robust and decentralized, and people can diversify across them. And so I think that people are going to be able to choose their own level of involvement with the network. And I think that the fee concerns are overblown in the sense that so far, when we had like a big fee spike and then SegWit came, that was basically a block size increase. And then we've also had increased batching from exchanges, which are using block space more efficiently. We've also seen a drop in the use of like using arbitrary code like opcodes to move other things.
Mhm.
People used to pay a lot of fees for that. That's gone to other chains generally. It's kind of died down. We'll see what happens with things like stable coins on Bitcoin. Like there's been some technologies that might bring some of those back, but we'll see. But basically, going forward, if the network gets another 5x or 10x more use to it, there's not really any more offsets to be done without another soft fork. So we would expect more sustained fee pressure to eventually come to the network, which I think would be a good thing and a healthy thing up to a point. And whenever fees get too high, it naturally drives more incentive for people to offload onto other networks. So maybe, for example, side chains that are not historically used get used more if fees are high for 2 years in a row, for example. And then it encourages people to build better side chains or build better things like that. And so I think that this is a not just one technology, it's a whole ecosystem building out. So there's Bitcoin, there's Lightning, there's Fediments, there's
Mhm.
Liquid, there's custodians and proof of reserves, and then there's multi-sig, and there's multi-institutional custody. There's all sorts of stuff building out on this, and that's not like a short process. That's like a generational process, and I think it's well designed. And I think that the risk is basically if for whatever reason Bitcoin were to stagnate and not be attractive to people, eventually yes, the fee market could be an issue, but it's not because of the fees. It's because whatever other properties Bitcoin lacked that drew people to it, eventually it could become insecure.
Mhm.
But I wouldn't consider that a base case. And I think people that are too focused on that are thinking too much like central bankers.
Mm. You had a quite nice take on Nostr to that some weeks ago, where you said if Bitcoin doesn't have cannot be secured by fees, then it just doesn't work. But it's a very like Austrian point of view to see it. How's your take on that?
Yeah, basically it comes down to whether or not people want to have uncensorable transactions or not. I mean, if there's a world where, Bitcoin can process a couple 100 million transactions a year, and there's a world of 8 billion people, and if they don't want to pay for that block space in any way, either because the fiat currency system has kept them in it, or because they've just been diffused across a ton of other blockchains that are more centralized. If for whatever reason Bitcoin's rather tight block space is unable to interest a small percentage of the world population to want to use it, then that opens up questions around its own market suitability. Now, I think that it's attractive. I want it to be attractive to people. I would like to see it bigger and healthy and to have kind of a sustained fee market, and I think it will. But I think there's so much concern that people have on how can we make sure Bitcoin has a fee market. And my view is take a step back. I mean, it's got 1% of the volume of Fedwire right now. What's it going to look like
Mm.
at 5% or 10%? What's it going to look like when it gets bigger, right? So like let's see what the demand for this is, and we go through a couple more cycles before we start freaking out about whether or not it's going to be able to pay for its own security. And then and I see this a lot in like macroeconomics. People are like, "Oh, all this debt's going to be deflationary," and it's like, well, until they print the money to offset it, right? There's people often don't include the reaction functions that occur either from market forces or other things like that. And so, if for whatever reason Bitcoin fees get low for a long period of time, and then someone uses that to capture the network, what would the response be? Would that be like another test of the network? Like when China banned Bitcoin mining, when multiple entities tried to change the block size, when Mt. Gox was hacked, had all those issues. Basically, if it gets censored, the question is, okay, are people going to be willing to pay to get their transactions uncensored, and how will the network respond to it? And will miners see the market demand for this and go to jurisdictions where they can meet those needs, or is the network a failure? And so I think we have enough. I think the technology itself is well designed, and I think there's enough market forces to sort out the question of how valuable this block space is. And I think that I expect it to be very valuable in the future.
Hmm. Speaking of privacy and censorship, it is certainly quite new for a money book that in Broken Money there is a chapter on human rights and a sub-chapter on privacy. What connection is there between the common thread topic of technology and the terms just mentioned? You were touching that before briefly, but maybe we can dig a little deeper into that privacy and censorship topic.
So there are a couple reasons. One is that I mean Satoshi himself was private and wanted his money to be used for basically freedom, as far as we can tell. At least that
Mhm.
was his public position. And so, I think that I wanted to kind of continue that ethos to some extent. But also in other parts of the book, I cover things like the long-term debt cycle. So what do governments do when they hit very high levels of sovereign debt? And the answer a lot of times is financial controls. They try to capture people into the cash market, the bond market, and then inflate it away, for example. And we see this in developed markets in the past, and we see it in emerging markets today on a regular basis using various capital controls. In addition, the public narrative you'll see is that, oh, Bitcoin's for like money launderers, it's for like, illegal people. And it's like, I wanted to bring back the context of how far we've gone in this because, money used to be naturally private. And the rise of the telecommunication systems and the banking systems has kind of corralled everyone into these very surveilled walled gardens, and that has now become normal to a lot of people where they think if you don't have that, you must be crazy or you must be up to no good. Whereas what I try to do in that part of the book is to say, I'm basically trying to pre kind of set the field for common objections to Bitcoin and to say, no, privacy itself is not a problem. And then I also present in that chapter or that part of the book the Phil Zimmermann saga of whether or not encryption was legally allowed in the United
Mhm.
States in an open
Mhm.
source basis. Because people often say, well, if Bitcoin's a threat, it'll just be banned. And I review some of the legal precedent or some of the historical precedent for similar technologies like the encrypting information, and to see, okay, this is an era where the federal government did try to add frictions to it, and they lost. And so there's hope there that something like this, even as large state actors try to resist it, you can use their own rule of law against them. You can, if you have public opinion on your side through things like making the case for why privacy is normal and good, then you can push back against these attacks. And so I think that Bitcoin, and especially the private side of Bitcoin, will be challenged in the future. I don't think that many states are bothered by people having all their Bitcoin in an ETF, for example, or a big regulated
Mm.
custodian, because they're like, okay, it's in a walled garden, we know where it is, we can control that. What they don't really like is private Bitcoin, self-custodial Bitcoin, and that's where I think they're going to have their attacks. And so, if I'm writing a book about the usefulness of Bitcoin, or the probability that Bitcoin will be successful, or the ethics of whether or not it should be successful, I feel like a book would be very incomplete without having that section on privacy, on human rights, on just the overall self autonomy that I think people should have in choosing their own money. And, people often, fear is a stronger emotion for a lot of people than opportunity, right? So when they can get caught up of the headline, like, this terrorist organization had some non-zero amount of crypto funding, therefore we got to shut this whole industry down, kind of vibe is like, they just think of their own safety. And it's like, well, any powerful technology can be used by good people or bad people. Luckily there are more good people in the world than bad people. And so, there were articles back in the 1980s when pagers, were like a uprising technology, and there were people literally saying, drug traffickers are using these pagers to signal to each other and avoid cops. Like, how can
Mm.
we restrict access to this technology? And of course, now it's like
Mm.
a trivial level of technology for us. And when the internet came out, they're like, oh, like bad people are going to use this. Like, how can we make sure only the right people can access the internet? But there's some things like the internet or money that good people, bad people use. And this is something where I think that we have to make sure that the Overton window does not shift in a direction where privacy is considered the same thing as being bad. That there can be privacy for good reasons, and there can be kind of self-sovereign money for good reasons. And one thing that I really help try to push that in the book is that, I'm not necessarily just talking to Americans or Germans. I'm saying, okay, take a global view. Imagine you're in one of the half, billions of people in the world, about half the world's population that lives in what is outright classified as either authoritarian or semi-authoritarian. And what would you do in that situation? Would you want this self sovereign money to exist or not? So don't just think of the best case scenario, like if you're in a country, you like the country, you feel safe in your country. That's not like that's not the biggest audience that I'm going for there. It's saying, okay, what could that country become in the future? What has it been in the past? And what are other countries like today? And that's
Mm.
that's the ones you want this technology to avoid.
Is that the reason why you say that CBDCs are not a good idea? You said it very briefly a few minutes back. Maybe can you explain what's your take or your stand on CBDCs?
So in general, the financial sector has become more and more surveilled over time. And cash is the last area of privacy, and they already have quite a bit of restrictions on it. I mean, go and buy, go and withdraw a very large amount of cash and see what the frictions are like, or try to deposit a very large amount of cash. Or I remember looking up, I think even if you buy, so in the United States, if you buy above a certain amount of gold, you basically get KYC'd. I read that Germany changed their laws back in 2020 where they lowered the threshold. It's like anything basically over like an ounce of
Yeah.
gold, and you get like KYC'd. And I don't think that's a sign of a healthy market. And CBDCs, what they try to do is close the last gap there. So cash and these small things are kind of the last vestiges of privacy. And I don't think that they should be closed. And I think I can see why governments want to close them, but I think people should be educated on the downsides of having those closed. And it's not, you just have to picture, okay, what if you're, just picture your least favorite politician, they're running your country now. Do you want them, you do you want privacy to be outlawed in your country, assuming that they're in charge? And most people would, if they think of it in those terms, they think, well, maybe not actually. Maybe that's not a good idea. So I think that states are going to try to do CBDCs. Some of them have already done so. But if they do, they trend more towards that China model of just ubiquitous surveillance and control. And I think that people should embrace the open source open source versions instead, and be more mindful of what these closed silos mean. I mean, part of the reason money's so broken is because people are trapped in all these different inflationary silos, and CBDCs are just another way to kind of try to get a more complete lock on the people that they already have.
Okay, that's a very good critique, I think, of CBDCs. But can you make an argument for CBDCs? Do they have maybe a purpose that you see?
A general purpose would be, one is that they would make the national security purpose, right? They say, okay, so in order to avoid terrorism, we can't have privacy. I use an example in the book where Christine Lagarde points to a terrorist action from 10 years ago in France as why nobody can have privacy. And it's well, 0.0001% of people in France have ever died of terrorism. And that's what we're going to base our entire money system around. So, but one of the go-to ones will be national security. Another one is generally accessibility. So if people don't have access to, in a lot of countries, people don't have bank accounts in developing countries because it's not a lot of overhead. If you have only $200 equivalent to your name, it's not worth it for the bank to onboard you and to have that administrative cost of having your account. And so some will argue that the government can do that function, right? And so they can say, okay, we can provide a certain degree of basic direct banking with a CBDC if the banking systems if there's certain people that are below the profit threshold for where that makes sense, right? So I think that's some of the well-meaning arguments for it. And some will then argue, okay, we're going to launch a CBDC, but we're not going to phase out cash. You can have both, right? So there's no downside. But of course, if you look at the history of financial changes over time, usually you replace things piece by piece and you start phasing out the other one. So you say, okay, CBDCs and cash coexist, but then you say, okay, your withdrawal limits for cash are lower now because, now you have CBDCs. Why would you need as much physical cash? And so you can start tightening the physical cash market more and more and shifting some percentage of that over to CBDC. So you further tighten the privacy thresholds that people have. But yeah, basically the well-meaning pro CBDC argument is basically either revolves around financial inclusion or security in some way. And so those ideas have to be taken seriously, but then explain to people, okay, this comes with a host of downsides as well. And so be aware of what you're wishing for.
I think it's quite telling that you didn't mention any economic opportunity coming with central digital currency or central bank digital currency. You just pointed out at the security and financial inclusion, but is there no economical opportunity there, like the digital payments, for example? That's what I think Madame Lagarde is pointing out.
I would kind of include that as a subset of the financial inclusion argument because you could argue that if more people that are not included in those get brought into those, that they can get brought into economic activity that they would otherwise be not included with. Now, in Europe, that's less of an issue than most Europeans have access to various types of digital payments and things like that. They could also argue that it would lower fees. They say, okay, banks all charge their fees. If we just have some big common government run thing that's, free or nearly free, we can cut out the middleman and that can, basically those people can work on something more productive. We have this centralized system. So I think that you can either make that a separate point or just a sub point. Probably it's worth breaking out and going into detail on. And I think a trend that I look at in the book is that for the past century and a half, almost all efficiency improvements in money have come at the cost of greater centralization. And with greater centralization comes corruption and other problems. And so those arguments for CBDCs, that they make it more inclusive, more secure, more efficient, more economic activity, you have to go back to history and say, well, but by further centralizing it, you're putting all your eggs in one basket, and then you don't know how that basket could be used against you. So there's a cost to that. And so that's why I think that what's powerful about Bitcoin is it's the first way to potentially make finance more efficient without centralization. It's the first kind of monetary technology that kind of breaks that prior trend, which is, I think, why it's so powerful.
Chris, you have another question before I go on? I had so many questions now.
You're good. You're good.
Okay. All right. Okay. So let's look at the current landscape. I think the ETF, the Bitcoin ETF, you mentioned it briefly, is on everyone's mind. What's your take on the Bitcoin ETF? Is it good for Bitcoin, do you think?
I think it's inevitable. And so, like, basically, if Bitcoin goes increasing levels of monetization, then eventually these big pools of capital are going to come. Either central banks are going to put it on their balance sheet, sovereign wealth funds are going to put it in their holdings, or entities like BlackRock are going to wrap it in ETF and pull it into the established financial system. So this, to some extent, if to the extent that Bitcoin's successful, these points of where are always going to happen. Two, I do think it's good for Bitcoin, even though it's not necessarily good for the people that use those ETFs, which is a difference. And so what I mean by that is, when Bitcoin had thousands of dollars worth of trading volume per day, you couldn't just throw in $1 million into it without moving the price. Like you just it was a very small market. And then when it had millions of dollars of trading volume, you couldn't just throw in $1 billion and buy a lot of Bitcoin. Now that it has billions of dollars of trading volume, it's still possible for large market participants to move the price, as we've seen in this past couple cycles. A couple sketchy exchanges can really influence the market. And so the bigger, more widely held, and more liquid it is, the better that is for the network as a whole. Basically, the less volatile it becomes, the more you can enter and exit it without moving the price, that's a key definition of money. Basically, the idea that money is the most saleable good is a very Austrian point of view, and in that sense, saleability is closely associated with liquidity. So, can you buy or sell large amounts of it without really meaning moving the price? And so, what I think these ETFs are going to do is they're just another layer of liquidity coming in. There are pools of capital in the U.S. and elsewhere that are in kind of taxable account, like tax retirement accounts or pension
Mm.
funds or things like that. That's kind of locked in there, and it's a way for them to access Bitcoin and participate in Bitcoin price. But then it adds liquidity to the network, and it adds awareness to the network and developer activity to the network. And so then it allows people, even in other countries, their Bitcoin holdings go up, their network liquidity goes up, their awareness of Bitcoin goes up, and I think that's a good thing. Now, I think that there are reasonable concerns around BlackRock's like centralization, like how much of the network will they end up buying. I think it's probably less than most people think, because as they buy it, it drives the price up, and so it's hard for them to just kind of scoop up all the Bitcoin. I think they'll probably, kind of like Grayscale. I mean, Grayscale's got a big chunk of the Bitcoin network, which is probably not great, but it's still a small percentage overall. We'll see how that goes. But basically, I think that it's overall a net good. But more importantly, it's a inevitability that if
Mm.
Bitcoin is going to reach certain levels of monetization, there are going to be large existing pools of capital. They're going to go into it in their own form. And if someone's like 70 and has an account somewhere, it can be reasonable to buy that ETF. But for most people, I would recommend buy it, self custody it, and use it kind of the way it was intended, like in the wild.
Mm.
Yeah, Willy Woo has a quite interesting contrarian take on that. He said Bitcoin lost its virginity in, when was it, 2019, when the futures market started, and by that point of time, the financialization, or Wall Street, yeah, became relevant for Bitcoin, and you can now short, I don't know, Bitcoin with I don't know how many million Bitcoins. What is your take on that? Is this a challenge or a danger for Bitcoin? This Wall Streetization? I don't know how you would call it.
I think it's a challenge, but it's again one of those inevitable ones. And so a
Mm.
reason that gold ultimately failed as money, it's still useful savings, but a key reason why it failed as money is that it had no useful ability to shrug off paper markets. The slow speed of it. I even in the book I cover I look at the 1875 book by Jevons, Money and the Mechanism of Exchange. And they're talking about how like paper instruments and now the telegraph are so efficient. Money's moving around all the time, but almost no gold ever changes hands. It's like so inefficient to actually pull it out, verify it, kind of custody it, all the expense that comes with that. And so the problem was that you had this empire of claims built on top of a pretty small base of gold. It was leveraged
Mhm,
like
mhm.
20 to 1. And so when it blows up, everybody wants to keep the claims, and they just revalue the claims in gold. And so instead of those claims collapsing back down towards gold, people just redefined what money is. And so gold was just it was inefficient enough that this fiat system could build around it, and people just for its convenience stuck with the fiat system, and gold got relegated to like a smaller niche savings asset. And but there are two aspects of a money that help it shrug off paper markets. One is speed of withdrawal. So the easier it is to self custody and the easier it is to verify and withdraw, the less of a
Mhm.
reason to ever risk it with paper markets. You either want to hold it yourself or you want it in very kind of high confidence, full reserve environments. You don't want it to be rehypothecated. And number two, the absolute scarcity of it. So gold, it still had like a 2% annual supply growth roughly. So that allows kind of the paper part to keep going for decades at a time, whereas Bitcoin has zero terminal supply growth. And so the combination of being easy to self custody, easy to pull out. Basically, I think that paper markets will be attempted to build on it, but the frequency with which those markets get wrecked is a lot quicker. Whereas with gold, it takes decades to get wrecked.
Mhm.
Whereas with Bitcoin, it takes years to get wrecked. And we saw that it's not just Wall Street, it was also FTX. I mean, they had paper Bitcoin. They had what was it
Yeah.
like $1.8 billion worth of Bitcoin that the customers thought they had by the end that wasn't really there. And that's an example. And so I think that that will be tried. That will eventually slow down certain cycles. That's why this is
Mhm.
a cyclical asset. Players that do that beyond a small amount will get wrecked, and that whole rec cycle is just compressed compared to
Yes.
to gold by probably about an order of magnitude.
Mhm.
All right, Lyn, before we let you go, I'll have to ask. I mean, let me set the scene. So we have a new conflict. We knew there was a unresolved conflict in the Near East between Israel and Palestine, but I didn't have a full-scale conflict like a war on my bingo card for 2023. So we have two, I think, not global wars, but globally important wars ongoing. So Israel, Palestine, and Ukraine, Russia. The West is not formally involved. Like it's not a NATO case, so it's not a NATO conflict, but still very engaged. So, what's your assessment of the global political landscape? I mean, you are quite regularly in Egypt, so I assume you're somewhat close to the newest conflict there. So, what do you think has changed now, and how does it affect your financial thesis? Maybe.
Yeah, I go to Egypt every year, and my husband's still there at the moment because he's working on our property. So he'll be back in like a month. And it's funny. I when I was there just like a month ago, I saw the Egyptian military planning their big 50th anniversary of the Yom Kippur War, the October 6th, 1973. And it didn't occur to me that there might be people that use that date to
Mhm.
basically attack, which is
Yeah.
basically what they did. They shifted it a couple hours later to take advantage of strategic hours. But basically, it's the 50th anniversary of Yom Kippur War,
Mm.
which is so it's like something we probably should have had more on our radar, especially me. But it is what it is. A challenge in history is that sovereign debt crises tend to lead to war, and war tends to lead to sovereign debt crises. It can go the feedback loop goes in both directions because obviously war is very expensive and that can contribute to sovereign debt crisis in the first place. But on the other hand, if a established power has a lot of debt, the enemies can perceive that the gates are down and that this culture is now less interested in spending money abroad. They're more focused domestically. They're more polarized. They have more troubles at home. So I think basically the global order that's been established since the 40s and then maybe especially since the 1990s is now being challenged on multiple fronts, and it's increasingly expensive to kind of maintain the order that has been in place. And so I've been comparing the 2020s to the 1940s for almost 4 years now,
Mhm.
and I always kept saying that I hope it's not kinetically similar. I was like, it's very macro similar. Hopefully, it's not militarily similar. Unfortunately, with Russia's invasion of Ukraine, and then with what's going on now between Israel and Hamas, it's looking more and more kinetic. And unfortunately, that's kind of my base case is that we see a number of conflicts around the world that take advantage of the fact that the existing powers are indebted and that existing power structures are just reshaped. It's always a kind of a market test to see where does the power lie, where does the kind of assertiveness lie? Like, not only what can you defend, what do you want to defend? What do you want to go out and exert your will on in the world? And so it's a terrible human rights issue like a humanitarian issue that's happening there. And I feel for like civilians all over the place that are just kind of caught up in
Mm.
this, that are just trying to live their lives. And there is, there's risk of escalation because, for example, right now we're obviously monitoring news to see, is Israel going to do a ground invasion? If they do, I mean, U.S. is getting assets in the region in case like Iran and their proxies attack more directly. And then what if the United States gets more physically involved? So right now it's involved in terms of finance and supply chains and things like that. But I think that unfortunately, sovereign debt crises and recapitalizations and monetary transitions tend to be very messy. And I think that we're likely in the early signs of that playing out over a multi-year period.
Yeah, I hope. Yeah, we can only hope. Coming back to the book, Lyn, I think Broken Money is, for me, is one of the best books to suggest to newbies to the topic of money and Bitcoin, because it really provides the foundation on what Bitcoin has evolved on. And I have one question: when German translation?
We're actually working on that. So
Nice.
we do have a German one in the pipeline. Translations usually take 6 to 12 months. I mean, it's not a quick process.
It's a
But we
long
are,
book. Yeah.
yeah, we are actively working on a German translation, multiple other European translations, and some other markets as well. I would expect that the German one would be one of the earlier ones that comes out, at least at this stage from what I see so far.
Yeah, we will highly recommend it in the podcast. We recommend it anyways, the English version, but once the German is there, we will
Thank you.
recommend it.
Yes. So also, I just wanted to say thank you, Lyn, for the book. I really enjoyed reading it. I highly recommend it. So everyone should go and buy Lyn's book.
Yeah, Lyn, thank you so much for taking the time to coming to Nodesignal. We might see each other on Madeira next year, because Jan,
Great.
Paul, and I are going to.
Great.
And
Looking forward to
we're
it.
looking very much forward to that. Is there anything else that you would like to say to our audience?
I think I mean, these are crazy times. I think it's important to, just be open-minded, reach out to, we all kind of exist in our little like online tribes now. We all kind of have our echo chambers. And I think it's more important than ever to reach out, understand other people, help other people understand you, because as we talked about, these kind of financial crises and transitions they're dangerous times. A lot can change. Social structures can change. Military actions and maps can change. It can be very dangerous, and hysteria feeds on that, and that can make it harder for Bitcoiners too. I mean, if they focus so heavily on capital controls, for example, and it's all about the war narrative, or it's all about the inflation narrative, then Bitcoiners can be blamed for things that they were just trying to fix in the first place. It's just like, so I think basically it's important to just kind of try to do your best to go across kind of group lines and just kind of understand what other people are thinking and help them understand you.
Yeah, thank you so much. This is a very, very important advice. I think, especially in Bitcoin, we sometimes tend towards being very ideological. Speaking of Bitcoin maximalism, which I like a lot, and I
Yeah, me too.
would call myself a Bitcoin maxi as well. But it's very, very important to stay open-minded and to see the things as they are, and not in a ideological way.
I think any group has warriors and diplomats, and both are important. And I think Bitcoin's the same way. There's people that are like hard line, and they help kind of like maintain certain things. And then there's other people that try to say, okay, I see what you're thinking. Let's have a discussion around that, and kind of maybe help bring Bitcoin to audiences that might have otherwise been turned off by it. I think there's a role for both, but I think that basically, even just outside of Bitcoin, this is a challenging time, and I think it's important to have empathy.
Yeah, nothing more to say. That's the best words to close this session. Lyn, thank you so much. To our listeners, if you want to provide a little value or give value back, then feel free to send us some sats. Yeah, Jan Paul, focus on the signal.
not on the noise. Bye bye. Thank you.
Bye bye.
Focus on the signal, not on the noise.
Nodesignal. Focus on the signal.